Hello, everyone. Mike Meback with KTVU Fox 2 in the Bay Area, talking money during this pandemic once again with Winnie Sun, Managing Director of Sun Group Wealth Partners. Thanks for being back, Winnie.
Absolutely. Thanks, Mike.
Hey, I've been talking a lot with some friends who are saying, look, the rates are so low right now. If I have a 4 or 5% mortgage on a 30-year, why not refi, right? Is there anything not to do? I mean, why not refi?
Well, that's a great comment, and I'm glad that they're thinking that way because a lot of people are thinking that way actually. And in fact, we've been seeing that refinancing applications are actually at a very, very high point. In fact, a lot of the mortgage bankers at different banks right now are going to tell you their phones are really busy and the applications are piling up. Certainly, right now, we've seen rates being quite attractive. In fact, in the last 3 or 4 weeks, they've been averaging on a 30-year fix around 3.4, 3.45, that area, depending on which bank you go to. But there are some things to consider. Like, for example, did you know, obviously we know that your credit score is very, very heavily looked at right now. In addition, think about the importance of the value of your home because that will impact not only your equity, your rate, but also things like PMI insurance, which usually is for loans that are up to 80% of value of your home. So if the equity in your home has gone down because I say houses or values have gone down, that could actually impact your refinance and how much you have to pay.
So in some areas of the country, I mean, home values, they've increased over the last decade and they've remained that way. If someone's looking to take out some money, I mean, would you recommend HELOCs right now, a home equity line of credit?
Well, I always like having everyone have a home equity line of credit on their home if they can have one. And the importance of that is it's because that's sort of your financial lifeline. In case you need to use the money that's in your house, if you don't have a line of credit, you can't set one up. And this is really big news because I want to share this with you. A lot of the big banks, such as Wells Fargo, Chase, in fact, at some point recently actually froze new applications. So a lot of the banks are saying, we don't know if we want to set up these home equity line of credits for people, for homeowners, because what if they had to tap them? So I'm saying if you're in a situation right now where your credit's still good, you still have income, and you have equity in your home, set a line up. It generally, in most cases, it doesn't cost you anything to set up the line. And in most cases, if you have to close the line for some reason, there's no cost, but it gives you a financial lifeline in case you need to tap that equity.
That's interesting. You mentioned about the banks and freezing those applications. What if someone has a HELOC, and I'll just throw out a number, $100,000 line of credit right now, and maybe they've used half of it and the other half is still there. Is there a chance that banks would freeze that money so the individual could not pull out the rest of the money? I guess the question is, do you recommend pulling out the cash and then just tucking it away in like a savings account or some other account just to make sure they have access to to those funds?
Now that's a great question. So we have been seeing actually, and we've had seen cases in the past where banks have had an opportunity to freeze lines. So if you're in a situation where perhaps you're a restaurant owner, right, and it's just not looking very good, and you're suspecting that you're going to need to tap some resources, and sort of, you want to look at your emergency line of credit first. You're looking at your any taxable brokerage accounts you might have, maybe a Roth IRA. But if you've tapped those resources and you know you're going to need money, then pulling out some money out of your HELOC probably isn't a bad idea right now because you can always pay it back.
Right.
And also that interest rate is going to be a fraction of what your credit card interest rates would be anyway.
Okay. If you had to pick, I mean, if I had to refi my 30-year mortgage, maybe down to a 15, or pull out a HELOC, I don't know. What would you do first?
Well, I think if you're in a situation where you can refinance, that would be my first pick because that would mean you have a solid credit score and you still have income. Now, understand the refinance process is really different now too because usually they would take a look at your housing equity, your equity value, your home value, and then they would take a look at your income and you're good. But now, actually, banks, because of the situation that we're in, you're actually then verifying that you're employed right when you're about to close on your refi. So if you're in a situation where you can get a refi and you can qualify, I absolutely will look at that first.
Okay.
And then from there, take a look at the HELOC because the HELOCs are attractive, providing that you can still use them.
Okay, let's kind of switch and talk about the stock market real quick because 3 months ago, Winnie, here we were looking at the Dow Jones. We were talking about Dow 30, reaching that 30,000 point mark, and obviously that did not happen and it dropped drastically. Where it is now, do you expect that to be kind of the new normal as we finish the rest of the year, the second, third, fourth quarter?
Well, I certainly hope not. But right now there's a lot of things that are keeping the market down for a lot of reasons because it's not just financial fundamentals and things that we normally associate with the stock market, right? Intrinsic business value, earnings, and all that stuff. There's so much bigger. And the bigger thing right now, as all of you already know, is the health concerns. So unless we start to see better news, we start to see, the antibodies testing more rapidly, more testing, more information, and we see more flattening of the curve, then people will feel more comfortable going back into the financial markets, making those investments. We heard this weekend, Warren Buffett said that he had completely taken out his positioning in Berkshire Hathaway in terms of all airline stocks. So that's a big deal. That means it is not back to normal. We don't know where travel will be. And these sort of concerns trickling down to different investors, money managers, and whatnot. So this is telling you that we're not out of the clear yet. So temporarily, we should expect continued volatility, and we should probably expect levels to be not much higher than we're at now.
Okay, so saying that, moving forward as an investor, if you're lucky enough to have some extra funds to do that, do you just kind of sit back and or how would you invest differently?
Well, I would take a look at situations where positively you're going to need the money in the future and that you feel you have enough time to capture, that market volatility both upwards and downwards. So for example, Mike, I know like the two of us, we have young children, right? And at some point they're going to go to college and we're going to hope they're going to go to college. So this might be an opportunity for us to add to our kids' college savings fund, right? Or our retirement in the future. So if your goals are long enough and you still have the sustainability of income right now, there's definitely a lot of opportunities to look at. I would look towards long-term goals. And also the other thing I would say is don't rush. So be conservative in how you're investing right now because there's going to be additional opportunities in the future.
It's funny. I've been playing that board game Life with my children, and when you start the game, you can go the career path, or you can go to college. And it's just fun teaching them the difference. Like, well, why do I go to college? Why do I need it? I'm like, okay, we're going to college. Just go to college for it. Just see what happens.
Yeah, I
Uh,
like it.
it's fun, yeah. Obviously, you're giving out great advice. I love our conversations. But if someone obviously can't connect with you with Sun Group Wealth Partners, what advice do you give people when they are looking or seeking financial advice, maybe looking for an advisor?
Absolutely. I've been doing these talks at all these major corporations for like their employees, these Zoom calls. And this is a very common question of, well, how do I find a financial advisor? Well, I think the main thing you want to do is find someone that you feel like you're going to have a very good conversation with. That's key. The other thing is to make sure, try to find an advisor who's been in the industry at least 15 years at this point. And why that's important right now more than ever is because an advisor who's been in business for more than 15 years has been through a down market, been through the housing crisis, like financial crisis, so they know how to pull you through. So that's key. And of course, you can also do a lot of background checks online now to see if your advisor has any sort of complaints or things that would be concerning to you. And more importantly, I would say nowadays, you don't really have to find an advisor right in your neighborhood because thanks to technology and Zoom and everything else, like many of my clients, I've maybe seen once or twice in the office total. It's all been by phone and email. So it gives you more flexibility.
Well, even if someone doesn't get a financial advisor, they should start by just having a budget. I mean, I was late to the game on that. I mean, pretty recent. Like I wasn't the guy who had the budget, and my wife, was a little bit better at budgeting and so forth. So I've gotten better, but for someone who's starting to create a budget, any, one or two tips you would pass along to them?
Well, your wife certainly did the right thing. So that was great and
You're
getting
busy,
you in
right?
that direction. Yeah, so I love that. I think in every relationship or everybody in your life, there's somebody in your life who is really good about budgeting. And so that's a great person to kind of seek out. And you can do it so as easily as literally pulling up a Google spreadsheet and just starting to track our expenses. I always say one of the best ways to keep a budget, in my opinion, is what I call the lazy budget, which is use your credit cards or your debit cards or your checking like ledger and figure out where you're spending each and every month and then add that up. It's a really eye-opening experience. And then do that for 3 months and figure out where you can cut. Because right now we are getting a great lesson in what our bare essential budget should be. And that sort of should be your starting point.
I know. She showed me how much she spends when she goes to the grocery store and food. That was eye opening to me. I had no idea. I mean, we kind of split the bills, but it is interesting once you see it in writing in front of you. Emergency funds, Winnie. Again, it depends where you are in life, I guess, but the importance of having just a little pocket of something tucked away, especially at times that we're living in.
Oh, absolutely. I mean, you hit it right on the nail. I mean, right now with the coronavirus, I think we're all getting a really quick education on just how important this emergency fund is. And unfortunately, for most of us, especially like you and I with kids, it actually has to be a little bit bigger than a little bit. So in most cases, you want to take a look at how much your monthly expenses are, once you do your budget, and you want to multiply that by six per person. And for children, yeah, for children, I would say at least 3 months each for each of them. And I mean, you have kids, I have kids, it adds up. But so right now, I wouldn't stress too much because you got so much on your plate already financially. But when we get better in the future, when things start to get a little bit more clear at that point, start really sort of putting a little bit more aside into your emergency fund. So make that a priority in addition to like saving for your retirement.
I know people across the country are still getting those stimulus checks and hoping to get them. Maybe some have already cashed them or they've been deposited into their accounts.
Mhm.
What's the chatter again out there about another round of stimulus, Winnie?
Well, I think that there's a lot of chatter, and then we're seeing a lot of information. I know the president is hoping for a reduction of payroll taxes. That's one thing, but I think more importantly, the mainstream American, the senior citizens that we have people who are out of work, the unemployed, the 30 million plus that are unemployed. We got to figure out a way to get money directly to them. So the stimulus check 1,200 was a good beginning. I think there's so many more people that need help. In addition, I'm really hoping this round that they factor in a standard of living because I think a lot of people in California and New York were was sort of the areas where the housing is just so expensive that a lot of those people were eliminated because of income, but they really need help.
Yeah, good point right there. Um, Here's kind of a scenario I want to ask you about. You talk about so many people unemployed right now, but let's say someone does have a chance to get a job in a certain industry that is hiring right now, and maybe that pay is not as much as the unemployment check that they've been getting. Um, I would think the better thing to do is to get the job and get back on a payroll and away from the state or federal help that you're getting. If someone has that dilemma, like you would think you'd want to get the job. There's so many, especially if there's benefits and health benefits along with it.
Yeah, I can't agree with you, Mike. More, Mike. I mean, it's exactly my. I think exactly the same. But you're reading in so many cases where people don't go on. They don't want to go back to work. Their employers are asking them to come back, get paid, and maybe work from home still. And they're saying no because unemployment pays me maybe 5 or 10% more. But you're right because this unemployment, sort of this extra bonus that the federal government's giving, is temporary. It's not going to exceed a certain amount of time. Like it won't be here next year, hopefully. So if that's the case, absolutely, I would take the job. I would absolutely be productive, keep viable and bringing in income. I think not, if nothing else, it also helps you stay busy and interacting with people in the workplace and most importantly, making a difference for somebody, someone's company or some client or some customer. So I would absolutely choose that because I think the unemployment stimulus that we're getting right now, as it stands, is only a matter of weeks. At that point, that extra bump will actually decrease, and you're just going to be getting what the state's going to give you.
Okay. Before I let you go, something funny. We were watching TV yesterday, my son and I, and then I stepped out of the room and I came back, and he said, "Hey, Dad, you should get this new car." He's like, "They're not going to charge you for like 6 months. Like you don't have to make a payment." And so I have noticed, Toyota a number of car commercials coming on trying to entice you to come buy a car, most likely because sales are just practically non-existent. But is it a good time? I guess I mean, next to your house, they say it's the second biggest thing you'll buy in your life, and I guess if you have the chance to do it and you have some extra cash or funds, is it a good time to buy a car?
Well, I guess it depends. If you really need the car, then we could talk about that. But in most cases, remember, a car, unlike a house in many ways is an investment because there's a potential for increasing in value. A car, on the flip side, is really just sort of an expense that in most cases doesn't go up in value. However, that being said, if you really need a car, I mean, certainly interest rates are really low. And like we see car sales from February until now is down, the sales are down more than 26%. So certainly from a supply standpoint, there's plenty of supply. So maybe you can get a great deal, but I would say right now, you're probably not driving that much. So it probably doesn't hurt to wait and maybe start your negotiations now. Send out emails to like every dealership that could potentially drop a car off in your front door,
Yep.
and just take your time and take let them come to you if
Yeah.
you really need a
And
car.
one reason he brought it up too is before the pandemic hit, I had been talking about the possibility of getting a new. My car's I think 9 years old, so there was chatter before this happened, and so that's why that popped up. But even that, I think someone who has a job and lucky enough to be working, that whole concept for me, I think I've put it aside for now. There's even with the stability that I have right now, I don't think it's the time is right now. We need to, like you
Yeah,
talked about, having that emergency fund may be a little bit more important, especially since I am home and I'm not driving around. So,
yeah, and
Brittany, thanks for
maybe
the
there'll be a better
conversation.
car later.
Yeah, thanks for the conversation. To all our viewers, interviews like this, plenty of content, always on the website, coronavirusnow.com. That's where you can find it. Winnie Sun, Managing Director of Sun Group Wealth Marketers. Have a great week, Winnie.
Thank you so much, Mike. Take care.
See ya.